Hello, my fellow investors, and welcome back, welcome back, welcome back. I hope you all had an exceptional week and a fun weekend. Now, this is not financial advice, it's just for my experimental and entertainment purposes. Please do your due diligence before investing in any type of investment, okay? Now, let's get to the nitty gritty. And once again, let's have fun. So this video is divided into chunks of some trading results, opening contracts, and dollar cost averaging our MSTY position. Okay, now the audio frequency may be a bit different from each other, but you can still hear and visualize the content. So let's go and take a look at my progress. MSTY just went down to 2680s. Okay, 2681. So, I had completely forgot that I do have a sell put expiring this week, and it's at 2650. That's the strike price. I'm actually gonna attempt to roll this position over here. I'm gonna attempt to roll it for another week. Maybe the same strike price, maybe not. Let's take a look. So, if we extend it for another week, we can actually get a premium of, let's take a look, dun 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 dun, of $52. That would be the premium because basically the intrinsic value on this sell put right now is at 128. That's how much it would cost me if I would want to buy it back or close that option, right? That position. But now, since I want to extend it out, they're going to give me 180 of credit. So the total credit that I would receive for this would be $50 or $52, whatever. Let's continue. Let's see if we can maybe generate a little bit more than that. Right now, let's see if we can do 75 bucks. Maybe not that. $75. Let's not get too greedy here. All right, and now I'm expecting to receive a credit. So yeah, basically all I'm doing here is extending it for another week. I know I could have rolled it down if I wanted to for a lower strike price, but at this point, 2650, I don't think is that bad. I can do some cover calls with that if we get a sign. Let's swipe it up. Let's see what happens. Hopefully it goes through. If it doesn't, then we'll make some adjustments later. Okay. All right, so we just found out that MSTY's declaration is going to be $2.02, meaning tomorrow, Thursday, MSTY will suffer a NAV erosion of $2.02. Okay, knowing this, we are going to attempt to make some plays today, but tomorrow we are going to try to have a field day doing sell puts. Okay. However, I do want to make some moves with the positions that I'm currently holding to see if we can generate a little bit more of income. Plus, I have two positions here that I'm very, very concerned about because I want to get my collateral released. And you guessed it, it's those credit put spreads that I had here for over a month. Right now, are they both in the money? Let me see. No, only one of them is in the money right now. The 27, and then the 25 still no, we don't, because once we get the ex-dividend date, this might go down. Even though I do have a week plus to make some changes to this, I don't feel too comfortable with them. Okay, so I'm gonna try this 27.15. I'm gonna try to buy this back or close it. They're asking 275 to 300, and yeah, you're not getting that. We'll give you about 175. Okay, yes. You can consider that a winning on my book. All right, so for this, I'm basically trying to buy this contract back so that way they can release my $1,200 of collateral. Okay, boom, let's do that. And we're done with that one. Let's go back and have a sell put here that it expires on the 21st, and it's at a strike price of $26. I'm going to see if I can roll this position a little bit more out. Let's gonna we I'm going to extend it for another week, same strike price, and maybe we can generate right now a total credit of 37. Yeah, it's all over the place. let's just uh, let's just sell it ourselves. Let's see if we can generate $45 from it. Okay, credit, baby, we're gonna get credit. And all I did here was I moved my expiration date, I extended it for one more week, same strike price. Let's swipe it up and let's see what happens. Hopefully it'll roll. If not, then it is what it is. We'll just continue holding it there. It's just a sell put. It's not generating any interest. So yeah, let's just continue to hold it. Now, one more play. I still do have 100 shares of the covered call. Remember the covered call that we bought last time, that we bought back for $5? Well, we have those shares available right now to do another covered call. Let's take a look. Covered call. And you know that my strike price is always going to be at 28 for that covered call because I got it at 27.04. Yes, I can do a 27.50, but just in case, I want to play it safe and I want to be able to get a nice capital gain. So let's go out 9 days out for 2 weeks, or a week and a half, and let's see if we can create. There's an open interest with a volume of 5. Let's see if we can get another $30 for it. Okay, and basically here it is. Since I own the 100 shares of MSTY, I'm going to use that as collateral in order for me to earn this estimated minimum credit of $29.96. And if the share price happens to get at 28 or above it, I would sell my shares, my 100 shares at $28. Okay, let's swipe it up and let's see what happens. So unfortunately, I wasn't able to record my live sessions on selling puts, but better yet, I'm going to share the results, the outcome that we had from those from the contracts that I was able to set. Okay, I'm going to share that with you along with some plays that I set in motion this morning. Firstly, let's begin with my limit orders that I had set before ex-dividend date with the goal of buying more MSTY while dollar cost averaging. If you see my previous video, I called it time to dollar cost average MSTY, which I basically explained the purpose, the reasoning behind it, and the reasoning why I was doing it that way. Okay, so if you haven't seen that video, make sure that you go back and watch it, because you could actually benefit from it, or you might know anybody else that can benefit from it. Okay, so let's go to our history. I'm gonna go as slow as possible so that way you guys don't get any of the effects from here. All right, we go to history. We're going to go to all types and we are going to select stocks and ETFs. Okay, here is going to show me all my limit buys and sales and whatever I have done. Okay, now I had only set one limit order at first. As you can see right over here, it was canceled and it was basically for $24.54, and I was going to buy all 22 shares at that price. I panicked because it was starting to go up, and sometimes MSTY has the history of increasing after ex dividend day. Sometimes it doesn't even give you the chance to to purchase at the lowest. Okay, so I'm like, you know what? I'm panicking here. Let's adjust, and that's basically what I did. Instead of doing all 22 shares, I split them in two orders. One was at 11 shares at 24.75, which was the share price at that time, and then I set up the other one at 24.54. Okay. Um, let's see, and then both of them executed the same morning, so we secured a happy conclusion on those two. All right, so boom, bada bing, bada boom, we got that. Now, as far as options, let's see, let's take a look. Whew, yeah, that's right. I became a sell put degenerate, just like retired on dividends like to say. Um, I opened up a few contracts to generate some income. Hopefully, it won't bite me in the butt, but I saw them as opportunities and I took the risk. So let's take a look. So we have this sell put right over here with a $26 strike price that I ended up rolling because I knew it was going to become in the money after the ex dividend date. So I figured, let's make additional income for it in the scenario that if it gets early assignment, we generated some income from it. Okay, so that was the reasoning behind that. That was the logic. We extended the contract to March 14 to give Misty's share price some time to recover. Okay, because I truly feel and I truly believe that it's going to recover. Yes, it will. Yes, it will. Um, if I get assigned early, then I'll just do a covered call for it, and we'll generate more income. Hopefully, right? All right, moving on. We have a covered call with a $27 strike price expiring on the 28th. Let's see what happens with it. If push comes to shove, I will attempt to buy it back if Nifty's share price continues to decline. Okay, and basically when I buy it back, I'll buy it back for cheap, and in the hopes that if Misty's share price declines and then all of a sudden it starts spiking up again, I can open up another cover call to generate a little bit more of income. All right. Okay. Our third contract is another sell put with a 23.50 strike price expiring on the 28th. Um, as far as how much premiums I generated from these contracts, I'm gonna share that in my next spreadsheet video at the end of the month. I want to keep this as a mystery surprise so that way I can start building up some anticipation for it, especially for myself because I have not tallied everything up. Okay. All right. Following, I have another sell put with a strike price of 24.50 expiring at the end of the month. Okay, already. Now, next, I still have this credit put spread that I haven't been able to close yet. I still have a week. Let's see what happens. Okay, I'm actually, at the moment, to be honest with you, I'm gonna wait it out to see if time decays it, so that way I can actually buy it back for cheaper or a little bit more economical. But it all depends on Misty's share price. Because if Misty's share price starts declining again, then we're gonna be in the money, and yeah, we're gonna have to pay a pretty penny for it just to close that back, or let it expire and see what happens. Okay. All right. Coming up next, we have this is an old sell put that now I am in the money, so I will attempt to roll it out and down. Fingers crossed that it fills. Hopefully it will. But that's the idea for that one. That's the plan. Let's see what happens. Moving on. Another sell put with a strike price of $24 expiring next week. Let's see what happens because I could just let this one expire, get a sign, or even roll it, depending on Misty's share price behavior next week. So, Misty, don't you misbehave. Okay? Let's keep it nice and controlled. Finally, our last, I think, yeah, that's the last. This is our last contract. It's another credit put spread expiring next week. I'm not taking any action towards it unless Misty has this massive bull run and it allows me to close it at an economical rate because that's what we're looking for with this credit put spreads. I'm looking to close those so that way we can get our collateral back. Okay. Well, there you have it, folks. That wraps up today's video. I hope I was able to keep you engaged and that you found some value or some sort of benefit to your investments. Okay. If you know of anyone else that can benefit from this, please share. Don't forget to like, comment, and subscribe so that you can follow my journey that I'm doing through Misty. And thank you to all of my subscribers. All 12 of you are highly appreciated. And I'll see you on the flip. Strategic Investor Al checking out. Take care.